every time we come into tax season, I'm always thinking more about how I can save on taxes. People are looking at their finances at this time, looking at last year, how they can improve for this year. One thing that a lot of people don't know about saving on taxes is that you can actually save a lot of money through multifamily real estate investing. There are some really good benefits, and if you don't know what those are, then I'm going to go into that today. Before we get started on that, I'm not a CPA, I am not a professional advisor, so always, of course, talk to your financial advisor. Everything I tell you today is from experience that I have in real estate myself. For example, I cut my taxes in half last year by using these methods. And I know you guys can too. Most of you have probably heard about depreciation, but if you haven't, depreciation is basically when you have an asset, such as an apartment building. The government assumes that over time that asset is not going to be worth as much because things will depreciate, things will get old, things need to be replaced. And this is part of the tax code. This is something that is available to you as an investor for single or multifamily property investing, and for residential or commercial types of investing, and it's a pretty common write-off. Now, the beauty of depreciation and the benefit it has to us as real estate investors is that this depreciation is able to be written off against the income of the property. That means that when you have a property and let's say it is making $100,000 a year, and let's say that the depreciation amount you can write off every year is $20,000. That's just a random number, but let's just say that $20,000 is able to be written off against that income that you're making, and so therefore, instead of paying taxes on $100,000 of income, you're now looking at paying taxes on $80,000 of income instead, which lowers your tax bill and lets you keep more money in your pocket so you can keep growing your wealth. Now, where it gets interesting and where multifamily investing can differ quite a bit from single family and smaller residential investing is that when you get to bigger sized properties, such as a 100-unit apartment building, there's something that you can do to accelerate your depreciation and take more of that write-off in year one. This is called bonus depreciation, and in apartment buildings, how it works is you do what's called a cost segregation study, and this study allows you to go into the property and look at every asset that you have within your property. So instead of looking at the building as a whole and getting a certain amount per year that you can write off, you have a third party come in and do a study where they look at everything and they look at how long each type of asset has. They look at how are the floors, how long are they going to last, how much lifespan do they have left on them, the windows, what about the appliances? And basically they make a report based on that. And by doing this study, you are able to take a lot higher amount of depreciation up front because different asset classes within your building depreciate at different rates of time. Typically, this has to be done at a larger scale to make the financial investment of doing the cost segregation study make sense. But at a larger scale, it absolutely can make very much sense. A lot of times in real life, the bonus depreciation will actually exceed the income that you make. So basically, you'll have more to write off in bonus depreciation than the property even made an income. Now, if that's the case, this is where real estate gets even more interesting. What you can do with that loss is you can write off that passive loss against any passive income that you have received. So, for example, if you made lots of money in the stock market and you sold your positions and now you have $100,000 in profit that is now sitting in your account and you know you're going to have to pay taxes on, you can take that extra depreciation expense that you received from the property that you won't be able to use any other way, and you can write it off against that income. So now, let's say the extra bonus depreciation was $30,000. You're able to subtract $100,000 minus $30,000 to only have a taxable income amount of $70,000. So this is, again, is just an example. I'm not saying that these are the numbers that you would see, but this is to show you the power of what real estate investing can do. This is all completely legal and very common in the syndication space and when you invest passively in these deals. So it's a great tool to be able to build your wealth and grow it faster than you would if more of it was going to taxes and other things, other expenses that you don't really have much of a control over unless you have some multifamily real estate investments in your portfolio. And this is just a glimpse of the power of real estate and into how much it can help you to build your wealth faster, more efficiently, more safely, and also help you save significantly on taxes, which then you can keep more of that hard-earned income that you've made and reinvest it into things that will help you build your wealth. And I'd say the best part about this is that you can invest in these multifamily deals, in these apartment buildings, and you can do it completely passively. You don't have to be actively involved, spending your lunch breaks and your weekends and your nights trying to manage these properties while working a W-2 or running your other business. You can do all of this as a passive investor. They call them limited partners in a syndication model, and you can still receive these tax benefits. So you're completely passive in the deal. You don't have to worry about tenants, toilets, trash. You don't have to worry about any of that, and you're able to still reap the benefits of the tax code from being a passive investor in a deal. Being able to be passive in a deal like this is really powerful because you're able to grow your wealth without having to spend your time doing so. And you're able to grow your wealth more quickly and to save a lot of money, a significant amount on taxes. So if this sounds interesting to you at all, this is exactly what we do here at KGI Capital. We help people passively build wealth through multifamily real estate investing, through apartment buildings. If you want to learn more, you can follow along here on the channel and set up a time to chat with me. I'll provide a link below. We can talk about your goals and what it is that you're trying to accomplish with growing your wealth. And if we find that we align, I'd be happy to chat more with you about what that could look like in the future. I hope you have a fantastic day, and I hope to see you on the next video.